Hello friends, James Stevenson and Loki here with part 3 in my Q4 2024 Tesla earnings forecast review series. This will be the last video, I think, because I am out of time to record videos this weekend before I have to go back to my day job and work tomorrow like a sucker. But I will release these videos Monday, Tuesday, Wednesday, and that'll be just in time for Tesla earnings. Right, Loki? It's a perfect plan. And then I'm going to feed him dinner right after I record this video. So he is looking forward to that. He wants to jump back into his bed right now. You can keep an eye on Loki. In the Loki's bed cam, there he is, spinning around in bed, trying to get comfortable. You'll be able to keep an eye on him in the Loki cam down here. While I pick up where I left off in the previous video, looking at this chart, we'll go to the next one. I think it's the same chart, except excluding regulatory credits. So if you throw those out, you get a slightly different number. That's all this is telling you. Yeah, your profits all just come down by a little bit, is the difference between these two. I haven't even made the PowerPoint yet that I need to make to get the images that I will post in my 69 tweet thread. Here's the inventory chart tab. The fun thing about this, if you view it in Excel, is that you can go through all of the models that Tesla has. Whoa, this is interesting. I guess some of these have different timelines on them. Well, or they just appear to be hopping around some. All right, I'll put it back where it was. This has come loose on me somehow. So what you want to have happen here, you know what? Forget it. I'm just gonna not show you this chart in this video. There. Problem solved. I'll fix it later. We'll fix it in post. Here's one showing Tesla's average revenue per delivery versus automotive gross margin excluding regulatory credits as a percent of revenue. What a mouthful. So what's this orange mountain range in the back doing? This is giving you the average revenue per delivery. It used to be super high at the beginning of 2018 because Tesla sold mostly Model S and Model X. Then Model 3 joined the mix, and the ASPs fell like crazy because Model 3 was ramping up. So the more of your mix that's Model 3, the lower the average sale price is going to go. And that kept happening as Model Y ramped up as well. And that kind of bottomed out in late 2023. And in 2024, we saw this hop up some and maintain. Now, we don't know what the Q4 number is yet. We know what the deliveries are, but we don't know what the revenue is yet. So I'm forecasting that it'll improve a little from what we saw in Q3. And then from there, it'll keep improving into the future. As more and more people buy full self-driving is what the long-term forecast here is telling you. And the blue bars are giving you the automotive gross margin excluding regulatory credits. So if you throw out the regulatory credits, what's your automotive gross margin? Well, it had been as low as 14% in Q2 of 2024, but since then, it hopped right back up to 17%. I've got it at 19% for Q4. And then my forecast is for it to continue growing into the future. So let's hope that FSD is worth buying real quick and more people start buying it. That's what this forecast assumes will happen. And my actuals are in the wrong place because I didn't update all of these charts as well as I should. Now you can get a little bit of behind the scenes into how James makes these charts. All right, so that looks a little bit better. This is my forecast from 2025 forward. You had already guessed that. Technically, my forecast is from Q4 forward, but that's going to be out of date within the week. So rather than have to fix them all again, I'm just cheating that a little bit. And then I didn't do a very good job of updating this one either, unfortunately, sadly. I'm going to drag this back to show you this chart. What's this chart showing you? It's Tesla automotive revenue and cost of sales per cash delivery, excluding leased revenue and units sold and regulatory credits. What's going on here? Well, you throw out the regulatory credits, same as we just saw, and you throw out the leased vehicles, revenue, and units. So that way you're just talking about, hey, how does Tesla do when they sell cars new for cash? And before they've sold any regulatory credits. Forget about those. Forget about the leased vehicles. What's left? Well, what's left is this. ASPs are the red bars, excluding leasing and credits. So as of Q3 2024, sitting around $42,000 revenue per vehicle sold rather than leased if you don't count the regulatory credits. And the cost has come down to about $35,000. And I've got it hanging out in that range here for a while before Tesla figures out how to cut some costs out of the production system. I will leave it to your imagination how Tesla is going to be able to accomplish that. Optimus. There may be room to automate factory production more than Tesla's factories currently are automated. They already use robots. I think in the future they're going to use a lot more robots to do a lot more of the work currently being done by human beings. And then what's the line on this chart doing? That's the number of cash deliveries, meaning deliveries minus leased deliveries. So I've got that number rising from where it is today, 500,000 vehicles per quarter to nearly 1 million vehicles per quarter into the future. Why do these bars cap out around $75,000 or $80,000? I think it's because Tesla's going to stop raising the price on FSD at some point. They're going to say, hey, the market will not bear more than $25,000 for a lifetime FSD license at the time of sale because these vehicles wear out over time. And that's my guess for where they're going to stop raising the price of FSD. And then at that point, you don't keep getting more and more ASP growth forever. It more or less tops out around $75,000 to $80,000, I think. All right, I got more pretty charts to show you. Let's see what this chart does. It's just the regulatory credits. If you wanted to know what they were, I keep throwing them out. What are they? They are these numbers. Way back here in 2021, Gordon Johnson said regulatory credits are going away. That's not going to be a thing that exists anymore in the future. And since then, Tesla has broken the all-time record for regulatory credit sales. 1, 2, 3, 4, 5, 6, 7 times, right? This one's speculative. That's Q1. We'll see what we get. But I'm not forecasting crazy things, is what this chart's supposed to show you. You might believe that these regulatory credits are possible going forward. And yet another chart where I forgot to drag the actuals box over. So I'm glad I'm fixing this before I publish these to X and then get a lot of criticism from a lot of people for not paying close enough attention to where I dragged my actuals and forecast boxes. What's this one do? It is the next 12 months non-GAAP EPS. So a couple of these I could make smaller by formatting the data point to be a smaller marker. So we'll just drop the marker size on these from 12 down to 5. That'll be good for you and for you. And now you've got some behind the scenes on how James makes his forecasts. Oh, and then all the rest of these need to be the big size instead of the small size. Maybe I'll just dispense with that format for how to show this off. What do we have here? We've got another S-curve, right? So we had a little baby one here, and we're going to have a big monster one here. For non-GAAP EPS, it's the same trend that we saw on the adjusted EBITDA chart, just on a per share basis here, and I'm using the non-GAAP number as the profit metric instead of adjusted EBITDA, but showing the same trend for the same reason. This is the same chart as this one, except on a log scale instead of on a normal nominal dollar scale. So this one you can see 10, negative 10, 0, 10, 20, 30, 40, 50, 60. What's the scale on the next one do? It does $1, half a dollar, a quarter of a dollar, 12.5 cents, 6.25 cents, and the bottom of the chart here is $0.03125, which is, there was, I guess, a loss in Q3, which is why this hops off the chart for a minute before bounding back up again. What's this logarithmic chart show you? It says Tesla has grown their earnings faster before than I'm expecting them to grow in the future. Now, they've also done it less reliably, so some of these were down, and I'm not forecasting any future quarter to be down, because why would you? I've got a forecast here that Tesla's earnings will grow, but not to a ridiculous degree or at a dizzying pace, right? Is there a point of diminishing returns at some point? Yes, you're probably not going to make trillions of dollars worth of earnings per quarter anytime soon, maybe one day, far into the distant future. Here's the best way I can show you to illustrate why I believe earnings are going to get a lot better over the next several years. And it's because Tesla's average FSD revenue at time of purchase per delivery, I think, is going to get better every quarter as time goes by. So here's where we have Q3 of 2024. That's the most recent actual here. And then here's my forecast for what's going to happen in Q4. And then into the future, I think more and more people are going to buy FSD. And then here's that $25,000 price point where I think Tesla will stop raising prices and say, you know what, everybody's buying FSD now because they have to. We're not going to sell you a Tesla unless you buy FSD, and the price of FSD is $25,000. Whether they bake that into the price or not at that point doesn't matter, really. I guess they'll have to bundle it at that point if it's not an option. I don't know. Well, who knows? We'll see what happens. This is what's in my forecast. If you want to know why I think the earnings are going to get a lot better, this is why. Because there's hardly any variable cost that comes with selling a lot more people the software that's already done. It's already available to be downloaded. So the profit margin on selling one more software license is nigh 100%. It's almost 100% profit. I'm going to skip this one because this one I didn't even update. And that one. Here's what the PE ratio compression and range chart looks like. If you were wondering what's been happening in Q4, well, here's what happened when the stock price went up by a lot. The quarterly high PE rose with it. And the quarterly low PE rose with it, and we ended the quarter at a PE of 157, which is higher than it's been, but not the highest ever. You can see back in 2020 and 2021, the numbers were higher than they are currently. So this was a pretty good deal to buy Tesla stock. Even a few quarters ago, at this 30 PE, people were calling Tesla overvalued then, and those people were wrong. Those Tesla short sellers, haters, and trolls did not think the stock price would recover to all-time highs, but then it did. Here's a chart showing the operating expenses for Tesla broken down into the categories of restructuring and other, CEO stock compensation, and SG&A stock comp excluding CEO compensation in the dark blue. The lighter blue, SG&A excluding stock comp, and then the very pale blue, almost the white, research and development is the base for this stacked chart. I even threw in some restructuring and other in Q2s. That seems to be when Tesla does the most restructuring and other historically. So I have thrown in some just so that every year has a little restructuring and other, and I'm growing that over time. You can also see the CEO stock compensation, which in the past has been pretty lumpy. Those are the greens here. I've got that growing as time goes by with more and more money being paid to Elon Musk to be CEO of Tesla. This is just the SG&A if you look at only 3 of those categories and you throw the other 2 out, being the research and development and the restructuring and other. This one is just if you wanted to know how the expense was spread on Tesla's 2018 CEO Performance Award package. Here's how much expense Tesla declared in each of those quarters. That's kind of an old chart. I didn't update that one, so we won't look at that. Here's what I'm forecasting for Tesla's non-GAAP EPS. So I've got it recovering next year to about double what I think it'll end up 2024 being. Remember that 2023 was aided by $1.70 per share of one-time benefit from prior year's losses. So if you throw $1.70 out of here, 2023 would have been $3.13, so less than 2022 was. And you see 2024, tough year for Tesla, especially with that bad start in Q1, not even rising to that level of $3.13 from the prior year if you were to throw out that one-time benefit. But I see good things happening in the future for Tesla, as shown on the chart. What else do we have? Well, we've got this automotive gross margin chart comparing Tesla's automotive gross margin with and without regulatory credits. So the very pale blue mountain range here is the regulatory credits piece of Tesla's automotive gross margin, and the darker blue is showing you, if you threw out the regulatory credits, how much would Tesla's automotive gross margin be? It's very comparable to what Toyota has been reporting over the same time period. They're upheld as the standard in the industry for what automotive gross margin ought to be. But Tesla has a secret weapon going forward that Toyota does not have, and that's that Tesla has full self-driving software that's gonna be worth buying increasingly as time goes by. More and more people are going to want to buy it, and Tesla's going to be able to charge more for it. And that's how you can explain Tesla being able to double, or maybe better than double, their gross margin past 50%, not to some crazy number. I don't have it built well. I mean, people will tell me this is a crazy number to get to these unprecedented numbers, but if you're selling software packages of $25,000 that have, I don't know, $100 worth of variable costs, less than that maybe, that's how. The hardware is already on the cars. The hardware is already built into the cost of every Tesla. It's in the base cost of building any Tesla, the cameras and the FSD chip. And all the wiring for it are already built into the base price, whether people buy FSD or not. So the more people who buy it, the more profit falls to the bottom line. It's pretty simple math. And I'm expecting a lot of FSD revenue growth for Tesla in the future. But if it happens, something like this S-curve could happen, leaving the Toyota benchmark in the dust. That's what I think is going to happen. Here's what I see happening for Tesla Energy. In terms of megawatt hours deployed, 10,000 megawatt hours is this first line on the chart. That's 10 gigawatt hours. Tesla reported 11 gigawatt hours. I'm forecasting 11,185. We'll see what gets reported by Tesla. But I've got it growing from there as Tesla's Megafactory in China opens. And more Megapacks get sold globally to utilities that want to make more money. If you would like to make more money and you have solar or wind, you want to buy a lot of Megapacks. And Tesla makes the best product in the biz. What do we have here? It's Tesla's energy division revenue versus cost of sales. So the yellow line is the revenue, and the cost of sales line is the red line. And these are the jaws of profitability opening wider and wider as time goes by. Tesla will have more and more gross margin contributed by the Tesla Energy division, due mostly to the strength of Megapack, but also Powerwall. Those sales have been hitting records recently. What do we have here? It is my forecast for Tesla's research and development. So if you were wondering what happened to the other one that didn't get charted, besides restructuring another, here's what it looks like by itself. Here's my forecast for Tesla's GAAP net income. You can see that oddball quarter here that had an extra $5.93 billion, it says in the footnote, or $1.70 per share. So here's what I have in my forecast for the future. What's this one showing? It is GAAP net income or loss in billions if you exclude regulatory credits. So it's an upward trend. I had to lose the decimal off this chart because there's so many quarters on it now. They were jumbling together. I got a chart here comparing non-GAAP earnings per employee to number of Tesla employees worldwide. This is my forecast for 2024, and it looks pretty bad. Hopefully, this number goes back up again in the future. This was a pretty good trend from 2019 to 2022, and then it fell back some. So as the number of Tesla employees worldwide is growing, now what we may see is some retracement here, right? So 2025 may come back if Tesla decides to automate a lot of jobs that the human employees had been doing. Or maybe that'll happen in future years, and then the non-GAAP earnings per human employee can continue their vertical rise on this chart. Let's see. I haven't updated these, so we're going to skip them. Here's just the quarterly revenue. If you want to see what's in my forecast for quarterly revenue, I've got that $29 billion I talked about 2 videos ago as my forecast for Q4. We'll find out what we get very shortly. And then this is my expectation for what will happen going forward. And here it is if you look at it on a trailing 12-month basis, which is why there are no bars for Q1, 2, or 3 of 2018. We're starting with the full year 2018 trailing 12-month revenue number and then building from there. So you see a couple of S-curves here if you smooth out the seasonality that happens, looking at every single quarter. This is the non-GAAP ending in Q2 of 2024, so you don't care about that. All of that is old news at this point, as is the net profit as a multiple of 2020 Q1. I had to make this chart for the hater hiding behind the fake identity Brad Munkin because he was comparing things against 2020 Q1. So I said, all right, let's compare everything against 2020 Q1, not just the following year or 2 years later. Here's my awareness chart. You can pause this and contemplate it. I got a reply from Elon when I posted this to X. Is there anything else here worth showing you? Not that, not this. And we've already reviewed this. So that's it. We're done with this week's forecast update, unless Loki has anything to add at this point. You are all caught up. So have fun with Tesla earnings. Thank you for watching the video. If you like the video, don't forget to click the like button. That'll be shaped like a heart on X or shaped like a thumbs up on YouTube. And I appreciate everybody who supports me. Thank you if you're a supporter of mine. I appreciate you, especially my executive producers, Kathy Kitchler and Rebellionaire.com. And I'll see you in the next one.